DOGEBALL was placed beside Bitcoin and Ethereum, mixing a presale pitch with two established crypto networks. That combination needs careful separation because presale upside claims and mature network utility are completely different risk categories. Three Best Cryptos centers on a sponsored-style basket of DOGEBALL, Bitcoin, and Ethereum framed as 2026 holdings before a market cycle. The first thing to separate is the trigger from the consequence, because the same event can affect users, traders, companies, or regulators in different ways. In this case, the pressure is specific. For viewers, the useful comparison is maturity. Bitcoin offers scarcity, Ethereum offers infrastructure, and DOGEBALL still has to prove market traction. That gives the story a clear reason to watch without turning it into a prediction. The anchor is not a mood shift. It is DOGEBALL was described as a GameFi and PayFi ecosystem on a custom Ethereum Layer 2 called DOGECHAIN. The confirmed details are concrete. DOGEBALL was described as a GameFi and PayFi ecosystem on a custom Ethereum Layer 2 called DOGECHAIN. The presale was presented at Stage 2 with a 0.0004 token price and more than $200,000 raised. A projected launch price of 0.015 was used to claim a 3,650% potential ROI. Those pieces matter together because one fact shows the event, another shows the context, and another shows why the market or user reaction was not random. A broad crypto audience does not need heavy jargon here. It needs to know which actor changed behavior and which part of the system now carries more pressure. The mechanism is straightforward. A presale can advertise large percentage upside because the starting price is tiny, but that does not prove future liquidity or demand. Bitcoin was framed around institutional demand and its 21 million coin supply cap. In plain English, the mechanism is the path between the headline and the real-world effect. If that path is weak, the story fades quickly. If that path is strong, the event can influence liquidity, access, trust, compliance, custody, or infrastructure beyond the first reaction. Timing also matters here because the presale was presented at Stage 2 with a $0. That context can make the same development more sensitive than it would be in a quiet market. The affected group is not the same in every story. For viewers, the useful comparison is maturity. Bitcoin offers scarcity, Ethereum offers infrastructure, and DOGEBALL still has to prove market traction. Ethereum was framed around DeFi, NFTs, Web3 infrastructure, staking, and Layer 2 growth. This is why the strongest reading depends on the exact channel of pressure. For some stories, that channel is exchange access. For others, it is a balance sheet, a court filing, a wallet movement, a bridge, a vault, or a central bank signal. Here, the important channel is tied directly to a sponsored-style basket of DOGEBALL, Bitcoin, and Ethereum framed as 2026 holdings before a market cycle. The unresolved part is narrow but important. The unknown is whether DOGEBALL's product claims convert into real users after launch and bonus incentives end. Three Best Cryptos should not be treated as proof of the final outcome until the missing piece becomes visible in public behavior, filings, product terms, wallet movement, or market data. That distinction protects viewers from reading too much into one move, while still respecting the fact that the move can have real consequences. The risk profile changes if launch liquidity, DOGEPAY usage, DOGECHAIN activity, and whether presale participants stay after public trading begins. The practical close is to track the observable signal that matches this exact story. If the signal appears, the event can move from initial reaction into a clearer market or user consequence. If it does not appear, the story may remain limited to positioning, operational changes, legal pressure, or short-term sentiment. If Three Best Cryptos keeps developing, that signal will show whether the event becomes a lasting shift or a short-lived market reaction.